Welcome back. Coach DC here, Strategic Freedom Consulting. And I want to share a quick video with you how I save $10,000 every year on my taxes. Let's get into it. All right. So first and foremost, many of you have probably heard this idea of paying your kids through your business. And again, I want to be clear, this does not work if you have a business with multiple partners, right? This is going to be a solo owner or a married couple. Okay. So again, you're going to be able to pay your kids. Your accountant, and again, I often say your deadbeat accountant will tell you, oh, no, it's risky. You can't be doing that. The truth is 100%, the IRS lays out, you can pay your kids from your business legally. If you follow me here, you can legally pay your children for work performed in your business, which offers significant tax advantages, particularly if your business is structured as a sole proprietorship or partnership with all parents, where partners are parents of the child. Again, if they're under 18, they're exempt from Social Security and Medicare taxes. Again, this is an absolute game changer. You're going to see here it's at $13,850. It's actually over $14,000 now. And so what I do is I have 3 children. I pay each of them $14,000 per year through my business. Again, what does this look like? It has to be legitimate employment. You have to give your child a job or a role that basically is reasonable for their age and skill set. So again, you're not gonna have a 2-year-old doing your books, but could you have a 16-year-old? Yeah, you could have a 16-year-old doing a lot of things. So the reality is when you look at this here, just make sure it's legitimate. What if you say I have a 1 or 2-year-old? Absolutely. Could you use your 1 and 2-year-old as a model in marketing materials? I did that for years. So again, if you're marketing your business and you have an appropriate role for your child as a model, that is a perfectly reasonable wage job that you can pay them a healthy wage for. Again, it's got to be a reasonable wage, and you have to have a correct business structure. Again, you're going to look at all these different factors here. And again, this is when you want to work with your accountant to make sure you're doing it the right way. But if you keep it under a certain amount, like again, we stay right around the 14,000, your child doesn't have to pay any taxes at all. So they keep the entire 14,000, and that's a tax write-off for your business. Again, I'm going to do a little math here with you, being that, again, I have 3 children. Again, depends how many children you have. If I pay each of my children $14,000 a piece, that is a $42,000 tax write-off for my business. So my business writes $42,000 worth of payment to all 3 kids, so $14,000 a piece. And then if I go over to a tax bracket chart, again, you can see I am married. I file jointly with my spouse. And so again, we are, let's just give an example. I fall into a 24% tax bracket. Your net taxable income is going to be somewhere between 201 and 383.9. And again, that's going to put you at 24%. 24% of 42,000 is just over $10,000. So again, that's $10,000 I would have given the IRS that I'm now saving in my pocket because I was able to write off the expense of paying my children. Now, my children get paid tax-free. Once they are paid, I can do whatever I want with that money. I can invest it for them. I can put it into life insurance. I could put it into real estate. I could put it in a college fund. Any of those things, it doesn't matter. Once they're paid out, you can still control it. They're minors, right? And so at the end of the day, my wife and I have been doing this for years, and it's saved us tens of thousands, probably over $100,000 at this point, well over $100,000 at this point, in saving taxes while building a savings account for our children. So for us, our preferred vehicle is we put that into a life insurance policy. We have life insurance policies on each of our kids, which again, we'll talk about in future videos, the benefits of whole life insurance that earns continually true compound interest. And so my kids, we put that cash inside those policies that they can then use down the road for buying a home, paying for school, starting a business, a number of things like that. So again, it is compound interest guaranteed at a certain percentage. That's how we choose to invest it. If you were into IRAs or whatever the case that you wanted to do, you could certainly do that as well. So again, this is something that's so important. Most business owners are missing this completely. And again, this is essentially, you're going to take that 10,000, in your case, it could be more if you have more children, that you would have given to the IRS, which in my opinion is the same as lighting it on fire. You might as well put it in a campfire. You're going to give that $10,000 away every year if you're not employing this strategy. All right. And if your accountant is not on board, it's time to find a new accountant. Again, that's something that we can certainly talk about if you need direction there. Lastly, I want to be clear. When we talk about our ability to layer our wealth, or basically take like $1 and have it do multiple things, this is the perfect example of this. And I just want to kind of go back to another slide here. Again, if you just look at, I'm on Coinbase right now, looking at the price of crypto. If I were to have saved $10,000 in taxes, right, and then my children each got $14,000 in any given year, I would have the option of buying $14,000 worth of Bitcoin or XRP, whatever the case that I wanted to do. If I said, hey, I want to invest in some crypto, but let's just use Bitcoin as an example. Again, if I go back to the beginning of Bitcoin, you can see here over the years, it's strategic. It just continues to go up. Obviously, it's volatile. It goes up and down, but there's no asset that's performed better in the last 10 years. You can see it just keeps climbing. Imagine if you put $10,000 of tax savings in Bitcoin in, let's say, 2020, it was $8,000. So now you're looking at $120,000 is the value of Bitcoin. It was as high as 124 just recently. Imagine if you put $10,000 in 5 years ago, or you put your child's $14,000 in 5 years ago. You would have millions of dollars for this. So again, that would be an example of wealth stacking, or layering your wealth, meaning you saved on taxes, you paid your kids, and then you put it into a valuable investment that's compounded, that grew exponentially. Again, this is also what we refer to as a deflationary asset, meaning that as the dollar is devalued, this actually goes up in value. Again, so that's going to wrap it for today's video, how I save $10,000 every year on taxes and through my business. Again, Coach DC, strategic freedom, protect, preserve, prosper.